Hey guys, welcome to the weekly market recap, week ending January 23rd. This is Stock Rock. Let's recap last week's market action, how the major indices performed, which sectors and stocks led that and lagged, how crypto moved, and what I'm watching for heading into this new trading week. Let's dive right into it. All right, so going over the major index performance is roughly pretty flat, mostly down, but pretty flat. Markets finished modestly lower last week. S&P 500 down 1/3%. Dow Jones down about 0.5%. Nasdaq Composite roughly flat. Russell 2000 down about 1/4%. So very flat week. Overall, this reflected a very cautious tone with the Fed decision coming this week on Wednesday. And we also had a lot of geopolitical issues going on last week with very limited upside follow through and selective participation with a lot of the backdrops going on in the market. Now to go over the sector performance, winners and losers for the week. Outperforming sectors, of course, as it has been through this first month of the year. Energy up 3.5%, materials up 2.3%, healthcare up 1%, consumer staples almost up 1%. These sectors benefited from higher commodity prices, defensive positioning, and risk hedging. And we have the underperforming sectors. Financials down about 2.5%, utilities down 2.3%, industrials down about 2% as well, and real estate down 2.2%. And information technology down about 1%. All these down because of rate sensitivity, geopolitical risk, and earnings uncertainty weighing on these names. Some of the top and bottom performing stocks. Top performing stocks, sector leaders, ExxonMobil benefited from energy strength as oil prices moved higher. Chevron, of course, followed broader energy momentum. Select healthcare names continued to show defensive relative strength. These names aligned with sector rotation into commodities and defensives. Some of the bottom performing stocks that dragged on some parts of the market, Intel down roughly 17%. Capital One sold off on earnings due to acquisition related concerns. Financial and industrial names broadly lagged the market. This reinforced the idea that earnings quality and guidance still matter in this market. Crypto performance for the week was pretty meager. Risk off tone last week. Bitcoin down approximately 1 to 2%. Ethereum down roughly 2 to 3%, and Solana weaker down around 4 to 6%. Crypto failed to show strong follow through. Because crypto and high beta tech have been so heavily correlated, this continues to act as a warning sign for speculative risk appetite. As far as sentiment in the macro backdrop, geopolitical headlines still continue to hurt the market. Tariff concerns, rate sensitivity with the meeting coming on Wednesday this week will lead to volatility this week. Investors are heavily defensive and the rotation is real. Commodities and staples outperform, while rate and growth sensitive areas lagged, and it's showing. What we want to watch for next week: key data, consumer confidence, GDP, labor updates, durable goods, and spending data. Key themes you want to look out for: does energy leadership persist? Can tech stabilize? We have some big earnings coming out this week, like Microsoft, we have Tesla, we have Apple, a lot of big names. And do yields and crypto confirm, contradict equity moves? And one last thing, don't forget the meeting on Wednesday. We have a rate decision that could be some volatility in the market, could be a no move, could be a cut. Wait and see. Last week was defined by sector rotation, energy, and material strength. Investors are very defensive right now, and that shows a little bit of cautiousness, as we saw tech and financials weaken, and crypto underperformance, of course. Breadth remains uneven, and this week's data will help determine whether risk stabilizes or further defensive positioning is warranted. If this breakdown was helpful, thanks for watching. This is Stock Rock. Peace.